Today we'll be analyzing on how we're able to pick US oil sell. So what was the thought process that go into selling of the US oil from this point, this particular point to this particular point? Yeah, it was not just any ordinary trade. We're able to pick the sell from the highest point to the lowest point, which it was magnificent. For others, when they see this trade, they think, okay, the US market will be very bullish, like they expect it to buy more and all. But we're able to know that, okay, at this point, this market is going to sell off from this point down to this point, and we're able to pick it from this particular zone, which I call dead kiss zone. This is a dead kiss zone. So how do we arrive here? First of all, we use a top-down analysis. So I was able to pick from here. I first used my fib. I first identified the trend. Generally, the trend is a sell. It's a bearish trend, which is sell. So I picked my fib from the highest point to the lowest point. I was able to draw my fib. Then on this zone, we have 61.8 level, which was marked out. So after marking that out, I came to 4-hour time frame to look into this level. Then I see that, okay, we have a fair value gap here, which market have not taken out. So I mark out my fair value gap here. Then I see that this is also a flip zone. Also, this area, it's a flip zone. So one market has rejected this area from here. 1, 2. So this is the third time market is touching the area also, which we expect a sell to definitely happen. So then come to my 2-hour time frame. So market was still bullish. I had to wait. Then my entry time frame is 1 hour and 30 minutes. So on 30 minutes, I was waiting for market reaction on 1 hour and 30 minutes. For what I was looking out for was just engulfing candle, which I saw on 30-minute time frame. So we see market first reject in this area. We see market first reject in this area. So when market first reject in this area, it didn't forcefully engulf it. So I didn't enter at this point because it hasn't confirmed myself. So we see markets come and retest this zone. So once it retests this zone, I see, and this is an indecision candle. Then we have engulfing candle. So at this engulfing candle, I had to enter myself from this side. Then here we have, on this place, we have fair value gap, then we have liquidity there, in which we are expecting market to come and take out from this place. We are expecting market to take this liquidity out. We expected it to come and take it out, which the market really did. It came down to this point. Then we are now seeing market reaction on this zone. So it was that, and when I just identified the trend, I draw my support and resistance. I see that, okay, it's a uptrend, but here we are expecting it to sell off from this point. So I draw my trend line, which the market was in channel, upper channel and lower channel. Then we see the market move up and all. So we still want to see a continuous sell to this point. Actually, we are still waiting market to sell to this point, to this zone. We expect market to reach this zone. So let's see how it play out. So that was how I was able, that was what went into my thought process for being able to pick this sell on the US oil. That okay, the US oil will slip when it comes to this zone, and we're expecting it to come to 65.103 per barrel. So it fell from 68.236, then currently is on 66.865 as I'm recording this video also. So, and this you can implement in your trading analysis. Even though the market look like, oh, it's an uptrend, we are looking for a breakout and all, but within this range, we're able to spot that okay, this is an impulse, then retracement, then after this retracement we are expecting what, an impulse movement. So we are still expecting market to sell down more a bit. So that was how we were able to take out our sell on US oil, which was a very, very great sell, a massive and straightforward sell. So with this, just subscribe and share. Stay tuned for other video where I'll be sharing how I took my trade and all. And this exact trade was able to make me to be in 1% in one of my profile account, which is a 10K dose account. So one thing is always apply your risk management, no matter how sure even the analysis is, always manage your risk also. So this zone, I call it dead kiss zone. So with that, you can always put it into your analysis also. You apply your fib, identify your fair value gap, identify your trend, then draw your trend line and all. Then at the end of the day, you definitely get yourself a dead key zone. So with that being said, we will call it a day for now. So I don't want this video to be too long, but just me showing you, just with journaling and documenting how we take trade and what happened in the thought process of taking the trade. So it was a sweet sell down from this point to this point. So this a sweet sell down. So for me, it was, for now we have 1 ratio. This exact move was, for me, I target 1:2 or 1:3. So currently here we are on 1:3. We had 1:3 here. So it's not about targeting 1:100, 1:1000, and no. It's something that should be sustainable over time. 1:100 is not sustainable. You don't see 1:100 every time. But if you can stick to a particular ratio, 1:2 or 1:3, over and over again, you always see it consistently. And you always want to take your profit so that you can strategize, reanalyze, and take your profits early. And it also encourages you and boosts your morale in taking trade when your trade hits your TP and you were able to re-strategize and analyze. So see you in my next video. Stay tuned, turn on your notification, and you will be getting more amazing video, more analysis, more of my thought process. This is me journaling, and I want you also to learn from my journaling. Thank you.